and welcome to ATFX's core PCE price index preview. Bit of a long thing to say there, but also one of the most important data prints out of the US in any given month, and particularly as it's the Fed's favored inflation indicator. My name's Nick Twidale. I'm the Chief Market Analyst at ATFX, and as always, I'm going to give you a preview on what we've got looking to come up from the data, and then how we can look to trade it, and whether we've got some big products that could be moving hard and fast on the back of that data release. So let's have a quick look at what's been going on. As always, as we know, the last couple of months, the US markets have been thoroughly dictated by what's been going on, trade updates from what the US government has stepped in and done, and what President Trump's given us on tariffs. No one's debating that. The interesting thing now is that those geopolitical factors have been moving the market. And now investors and traders alike are looking to see how data's coming out in light of tariff implementation or tariff implementation threats, and how they're affecting markets. Obviously, US inflation is a key factor in the twin mandates that the Fed looks at, both jobs and obviously inflation. They look at PCE and that's their favored indicator, and obviously the CPI numbers that everyone looks at as well. So this Friday, last trading session of the week, could see some big moves, especially if the data comes out off what is expected to be a relatively low 0.1% month-on-month increase. Now, last month, we expected a 0.3% increase. We got a 0.4% increase. So it's a tricky one. And essentially, some of the data that's been coming through has been going up and down, especially from the US and across the market. So what we're looking at today is where we can see some decent trading opportunities, and we're going to look at gold and we're going to look at euro, and how that translates into what kind of moves we could see from a differential from that expectation of that 0.1% increase that we're looking to get. So without any further ado, I'll move us over to first our gold chart, which has been trading incredibly choppily in the last few weeks. And most people who have been watching gold will know that. It does trade in line, essentially for the last few months, in line with global trade trends and risk on, risk off mentality, safe haven trading. So if we're looking for safe havens, we're going to gold at the moment, and it has risen to an all-time high, hit an all-time high around 3,500 back in the middle of April. It's pulled off there, but moved back again in the last few weeks. But this dollar indicator will give us something to trade off, and we will see the dollar move on the back of it, and gold will move on the back of that. Then we'll look at the major currency, euro, also trading at nice levels near recent highs. Could see some big moves, could see some breaks off the back of it. So without any further ado, I'll take us over to our charts. And here we are on the daily gold chart. So interesting moves recently. As I said, here's that all-time high that we hit way back, only a month or so ago. Back in April, up at 3,500, I think, with a 0.5 above that. And we've seen some choppy trading, and that's been basically on trade updates and dollar moves as well. The dollar has also been moving. We have to be honest, a lot of its traditional correlations have broken down. So bond yields, treasury yields have been moving higher, but the dollar has tended to fall off. That's not the normal correlation that we expect. And that's because there's been a bit of a re-evaluation of how the dollar's trading, and especially on that bond market. So what we're going to look at here is where there's potential for moves. And it is sitting quite nicely that we could see some big moves in gold off the back of this number. So as always, we're going to be looking for a deviation from that 0.1 expectation. If it comes in around plus 0.1, expect there to be a little bit of maybe a slight reassessment in the market, but nothing too much. What we're looking for from a trader's perspective is something quite off, a decent deviation. So in numbers like this, 0.1 is enough to get it moving. 0.2 or 0.3 would be fantastic. So we come in with a flat number, a negative 0.1, a negative 0.2. We're going to see some dollar selling. We're going to see some gold moving higher. As you can see here, we've got a good trend line resistance coming in on those daily chart lines, coming in around 335.00. A lower print should take us to challenge those numbers. This is the move from yesterday. It's about 1.33% it came down. It's just reasoning up again today. Got another few sessions before this. But if we are near that trading level, if we are near this resistance level, a lower number, especially if it's 0.2 or above, should challenge that level and should take us higher. Now, most traders be looking for a break of this trend line and probably a break of this recent high in May. That will take us up to challenge the May high over here, and then possibly, depending on how much of a deviation we get, to challenge the all-time high. Conversely, of course, we could get a stronger number like we got last month or the month before, I think it was. That will take the dollar higher. It should bring the gold price back down into this range here. Initial support will come in around about here. My chart's not giving me much. There we go, 3155. And then we're looking at the May low, which comes in at about 3120. So decent ranges to change in, and we will see moves on that. Now I'm going to move over to our euro chart. We'll have a look. Similar sort of presentation then. This could be some really big moves in the euro as well, and expect it to move harder and faster. As I said, with gold, we've got that safe haven trade coming in and out as well. With euro, it will probably be a pure dollar move. So here we go. Euro highs just saw back in. This is daily chart again. So these are longer term trades we're talking about. Just coming in underneath 116, the figure 115.74. That's the recent high. We're a little way off there, as you can see. We're down at 113.18 now. A lower print. So we're looking for probably zero beneath, minus 0.1, minus 0.2. Should fairly swiftly take us up to test this trend line. Now coming in at 115.55. We know we've got 115.77. A clear break to the top side does open a way. And these are sort of more medium terms. We'll probably see these kind of moves over the next week or so, up to challenge that key next level, which is the psych level at 120. And then you're looking all the way back to these highs from Q2 2021, just above 122, just beneath 123, in fact. Once again, big moves that could potentially happen. So keep an eye on this. What we've also got this week as well, comes out later today, we've got the Fed meeting minutes. They will probably confirm, again, from what we've been hearing from Jerome Powell, what we've been hearing from other Fed speakers, that they are in a wait and see mode. They do need to see data. That gives extra impetus on this PCE number that comes out on Friday. Gives us that little bit of extra power to trade if we do get a strong deviation. So there we go. Excellent trading opportunity. The other thing we always have to take into account, it does come early in the session on Friday. It is the last session of the week. These moves could get exacerbated. We could see further volatility as we come towards the New York close. Liquidity will be reduced, and these moves could really get going and really start moving harder and faster for an interesting Asian Open that next Monday. So good luck with your trading. If you need anything from us from ATFX, please do let us know. Thank you very much.